Gold and silver just hit record highs. Let's take a look. On Monday, gold surged to over $4,400 an ounce, while silver jumped to nearly $70 as investors reacted to a powerful mix of geopolitical risk and shifting interest rate expectations. One major driver is rising tension around Venezuela. The US has intensified its blockade on Venezuelan oil, and markets are increasingly nervous that the situation could escalate further. When geopolitical risk rises, especially around energy supply, investors tend to reach for safe haven assets, and gold sits at the top of that list. At the same time, markets are betting more heavily on Federal Reserve rate cuts next year. Lower rates reduce the appeal of bonds or non-supporting yield assets like gold and silver, which thrive when real yields fall. Put those two forces together, the geopolitics and easier monetary policy, and you get a powerful tailwind for the precious metals. The scale of the move is striking. Gold is up nearly 70% this year, and silver has surged more than 130%, putting both on track for the biggest annual gains since the late 1970s. Investors aren't just hedging war risk, they're hedging currency debasement, deglobalization, and financial instability, while staying invested in markets rather than moving entirely to cash. And it's not just precious metals. Copper also hit a record high, reflecting supply fears and tariff risks, while oil prices climbed as pressure on Venezuelan exports intensified. This isn't just a commodity rally, it's more of a signal really. Markets are pricing in higher geopolitical risk, looser policy ahead, and also growing unease about the global system.